Audio morning brief of the U.S. grain markets. It's 8:18 a.m. Eastern Time, November 27th. I'm Rich Paz for Critical Point. So we're winding down the month here. I've seen pictures in Brazil, and I've had some contacts. And yes, there's pockets of problems. There's pockets that had problems and are already recovering and doing quite well, even. And then there's areas that have done quite well. And to me, most of the dryness really isn't a corn soybean issue. It's more for other types of crops. And I think the free market system in the U.S. is basically telling us that, yep, you got some problems there. And last night I saw a soil map that is rather scary, actually, for South America. That they've been dry enough to, reduce the soil moisture. And even though there's rains coming through, it hasn't turned that around yet. So, but the market is basically saying, yeah, all that is a vulnerability. It's not an issue yet. So the markets seem to be rather lethargic here and stalled out. And if we didn't pay any attention to the global scenario, I would say the U.S. market's behaving normally this time of year, that it's just mush, it's slush, they can't get any contraction, conviction either way. They're just moving the grain, and nobody can push it either way. And the bottom line is we have all the grain we need at the moment anyways. And so we need that seller to back off there and force the demand to pick it up, because demand is there, at least domestically, okay? So nothing has changed from my long-term bullish scenario, and the season will be up in the summer. But as I've warned you, it might not do much of anything here for all three markets into the end of the year, even into early next year, more so on the soybean side for the harvest in South America. And so far, it's doing that. So not a lot of excitement. It's almost like it isn't even worth trading the grains here unless you're a very, very short-term trader. But at any rate, as we come into the corn market, the model is showing that if the level 3 bottom did not occur at the start of last week, it should occur today and no later, okay? So we do have an alternate forecast that it can still bottom here. And it is oversold. But for my favorite indicator, I don't like the spread of the indicator. It's warning there's a chance for lingering near-term downside momentum next 1 to 3 days, and that's just too long, okay? Maybe I should give it one more day just to be safe, but 2 or 3 days, come on. It's, we just have to assume, hey, we got a brand new level 3 downtrend. So the scenario is it can bottom today and move higher, okay, into next week. And that's because the model's now saying level 3 top last week, it was a lower high, truncated. They did all their buying the early prior week, and they just didn't get the South American news to get them excited. They didn't get the export news to get them excited. They just didn't need to bid up, didn't want to, and there was just enough selling to ease the market lower. So it didn't work for a nice, crisp level 3 trend that we would normally see, okay? It's lethargic, all right? Now, so it can bottom today, but if by chance it did actually bottom started last week for level 3, and it topped for level 3 last week, then the trend is actually down into next week. In theory, it can bottom this Friday, but there'd be a minor rule violation there, and I just don't like it. I think you should assume down into next week. So how do we know? Well, we're not going to know until after tomorrow. That would be the highest probability that if it's down into after tomorrow, then it's probably going to be down a little bit longer into next week. But I can see if you're coming up with any information to tell you, hey, just keep following the trend lower. It's actually been lower since November 15th. Maybe it's been a little sloppy, a little slow to the downside. And 5-day average can be resistance. The funds may want to continue to sell there. And they do have an appetite this fall of more selling than buying. But at the same time, the daily indicator is oversold, and there is that chance, just a chance, that it can bottom today. And so that's the dilemma. Is it going down into next week? And even if it's going down next week, it's oversold enough that they may put it down this week, then sideways into next week. Keep that in mind. It could even bottom a little higher next week than the low of this week. But overall, you would just say bearish in next week. versus a chance they may bottom today. So if it can trade over the overnight high of 465 3/4, that would be encouraging. And I think if you got a positive day today, tomorrow, okay, that would be kind of encouraging a chance of a level 3 up move. But this is going to be tricky. It's going to be difficult. And even if it's going higher beyond next week or well into next week, I think the upside's rather limited here. As I look at the weekly chart, it almost as if, yes, it wants to grind a little lower for a few weeks here or just be range bound. There's just nothing here for excitement on the bull side going into the end of the year. It's going to take a moment of realization, rationalization, that there is a more serious problem in Brazil. And that may take a while yet, okay? So how much downside? Well, I'm still leaving the old target in that begins at about 458, but unfortunately I warned you that it might go down to 450. Well, as of this morning, I expanded that downside target to at least 451, okay? And I think that's the lowest it should go with this oversold condition. To go lower, the oversold condition would not work, and the reason for that is we'd have to get more bearish out of Brazil. And they have got some rains, okay? But you look at that soil map and you keep thinking, man, if they don't keep it coming, this could be something where the market got it wrong, okay? It should have been bullish, and it was not, all right? But again, within our own domestic market, there's all the corn you want, so it's understanding why right the moment they can shrug off the world and not pay much attention to it. To really encourage me that we're on the right track of some kind of bullishness, we need to close above 470. And again, since we got this dilemma that we don't know for sure, kind of bottom today, the latest, we do have a scenario of lower in the next week. It may be best to be a trend follower and just be bearish until you see the market return to 470. Okay? That may be the best advice or concept or idea I can give you. All right, here goes the January soybeans. Now, January soybeans, this may be a mistake, and sorry for being flip-flopping around, but the model had pegged a level 3 bottom as of October 31st, a failed truncated bottom. The model's willing, in hindsight, looking to put it back to October 27th, which signals that the market may have bottomed November 10th, okay, which then signals it's due for level 3 bottom now, but that bottom doesn't have to show up until the end of this week to early next. So that leaves the door to be somewhat like corn to be bearish in the next week. But unlike corn, it's a little greater confidence probability here that it bottoms this week for level 3. So here again, these level 3s can be very fickle. We're in a fuzzy logic. The markets are always fuzzy logic, but I think I do a better job than most people of finding out the better take from that fuzzy logic. And at the moment, this is probably a risky thing, but I think there's a chance it bottoms today for level 3. But like the corn, when I said it could go in lower in the next week, well, soybeans could actually go lower to this week and still bottom this week. So there's still more downside, and as I look at the daily indicator, it's got a wide enough spread to suggest chance for lingering near-term downside momentum. So the recovery overnight may be nothing more than a level 4 intra-week upswing, but it ought to top today. It ought to be down tomorrow. If it's higher tomorrow, I think that increases the odds of a level 3 bottom. And I think if we can get a close here, I think we want to run with it. And then if it takes, let's say it closes higher today, run with it. But if it takes out today's low, dump it, okay? That kind of scenario where we may have to play games with it here. You can just see there's enough multiple scenarios that give us problems into next week if we're trying to be bullish, and I am, okay? But there is that moment that it can rally this week for level 3, and it can push higher into next week, although it doesn't have as much time to rally as some of the other markets here. All right. Now, let me double check on the weekly chart for soybeans. Now, I believe, wrong chart. Get on the right weekly chart here. I believe we've seen the soybeans as high as they're going to go from the level 1 trend. So the high of last week and the still higher high of the prior week, it met our price objectives, got a gold star, okay? And if you look at it last week, it did a negative reversal. It rallied and then come down sharply, wiped it all out. you can just see the bulls can't hold the market up, okay? If they put it up at a fast pace, there's soybeans out there. It buys them. People don't, if it would go up slow and be a stealth market, I think it'd sneak up on them. You'd find out they don't sell it, okay? But if you slam it up at what they think is a fast pace, and I don't know who they are, it can be the farmer, retail brokers working with the farmer, but it can also be the funds that just have some measurements there just saying, that's too fast. Sell it, okay? And see what happens. So not a strong market really, okay? And I think we've probably seen as high as it's going, but there's plenty of time. This market does not have to top out to the week of December 25th or later. Maybe we can get some more bullish news after all out of Brazil and put it up higher or something, but I kind of doubt it. But at the same time, the best scenario is the market ought to rally this week and maybe even into next week, into a level 3. And even though it may not go back to last week's higher, I think that would be actually the better time for level 2, level 1 tops, frankly. I don't think it really topped last week, but pattern-wise and the amount of buying that someone needs to do, and this may be more on the commercial side, not the funds, but I think we have to consider they've put it as high as they need to, that there's still going to be that supply there, and they're going to still turn a bit fickle as they put it up. So I'm feeling friendly to beans. I think they should rally this week, and they may even spill over into next week. But I also think that overall, looking out into sometime December, the beans are coming down, okay? And I don't like this rollover topping kind of pattern, in my opinion. But I think they're going to sell rallies. And I think it's time for another rally, and maybe that's a mistake. And the weekly indicator, it's somewhat bearish. It's about mid-range, hasn't gone to oversold. I think really the overall pattern is already down into that level 2 bottom, but I think there's going to be bounces along the way, and hopefully this next bounce will be fairly sizable, because I would feel better if the model then said top in place. But as a backup, just to be safe, just assume the market topped last week, it's going down into level 2 bottom. Maybe it could be in just a couple of weeks, but it could bottom, I think, as soon as next week, and I'll explain that better with the video tomorrow. But I'm thinking it's not going to bottom late December. And this kind of sends a message, we're really not going to get that bullish news out of Brazil, but what it may be is stealth damage down there. It may be once we get into January, we'll start seeing things come back. And in 2009, I was in Brazil, and I think towards the end of February, going early March, I forget now. Maybe it was March. But yeah, it was March. But when I was there, we saw farms that had about average yield, and they were very disappointed. They thought they were going to get fantastic yields, and it was really just the weather in February. So they can still get clipped a bit there. And again, I think everything's going higher in the summer. We just got to put up with downside down to early next year. Hopefully we've seen some of the worst, and it's just base building, but it's just a sloppy markets here, all 3 markets, okay? But the best forecast is, I think, at least day traders into week traders got a shot here for a bounce in beans before going lower, but I don't doubt eventually the beans are going lower. All right, I'll explain that better tomorrow. Now let's go over to the December Chicago wheat. And the model's saying level 3 top last week. I'm in agreement with it. There's still time for a pop into a level 3, but it's quite extended. I think it's over and done with. So unfortunately, the simplest normal pattern of supply-demand would suggest down into next week. And, and then I just warned you on corn, we have that pattern. But at the same time, the model's saying if we really dig deeper into the supply-demand, there's really no reason to take it lower and lower and lower and lower. This should not be an aggressively bearish move. And I agree with some of the global traders out there that say they need to buy, okay? And of course, they're looking at the commercial side of things, okay? So I'm a little suspicious that it's not going lower than last week. It's going to flounder around into next week, probably base build with inside a much larger, sloppier looking base building. And I'm still long-term bullish, okay? And but I can see why trend followers would want to be bearish the wheat market until it takes out last week's high at 563 and a half. And I do understand why some probably have targets lower than 540 right now. And I can come up with technical only targets all the way down into the 520s. But when we throw anything and everything at it, it doesn't make sense to us. So I think it's just more base building. I got to warn you, it's going lower in the next week, but I wouldn't be surprised it's actually going to be a sideways range and maybe even up a little bit. And I'm feeling a little bit encouraged looking out to end of year that the wheat can pick its head up some, perhaps better than the corn market. But for the moment, the level 3 trend is down until it takes out last week's high. And the indicator, the favorite 532 slow daily stochastic indicator is near mid-range and is rolling over for a sell signal. So it's quite delayed and lagging here, but it is a warning that it can work lower. But I think it ought to be a drift lower, not an outright bearish move. I think we've seen the bearish in here. It's fluctuating around the 5-day average. And I don't know, it just feels as though it really doesn't want to go lower in the next week. It may go lower some of this week, and then by next week's level 3 bottom, it'll actually be a little higher than the low of this week, and I think the downside is limited. Okay, so nothing exciting for all three markets for a while yet here, but I'm still long-term bullish. But people need to trade short-term, but in this time of year, they don't really seem to cause much activity. And it just gets difficult for the level 3 to level 1 traders to actually make money this time of year in some of these trends, that it becomes more of the level 4 trader and intraday type trader. Past results are not necessarily indicative of future results. Keep an eye on that South America weather and, of course, our exports and China news. But overall, it's still seasonal sluggish. Thank you.